Good morning and welcome to Stock Market Today for Wednesday, September 25th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities were lower in Tuesday's trading, finishing just off the worst levels of the day as the impeachment inquiry into President Trump pushed the market lower. Treasuries were stronger across the curve as investors bid up safe haven assets. The dollar was weaker on the major crosses. Gold finished up 60 basis points. WTI crude settled down 2.3%. The sector level was utilities and staples as the only groups closing higher, but I will note that REITs also outperformed. Energy was the leading sector to the downside with that 2% plus drop in oil. As we get to the desk this morning, S&P futures are down 20 basis points after the index fell the most in a month yesterday. Asian equities were broadly lower overnight, and European equities are under pressure here today. Treasuries are weaker with some curve flattening. The dollar is seeing good gains on the major crosses. Gold is down 20 basis points. WTI crude is off a further 1.4% following reports that the Saudis restored crude production faster than expected. So let's dive in now. Take a look at the S&P 500. The impeachment inquiry sets a risk-off tone for the market yesterday, and we are now testing the top end of support at 2950. Remember that support zone we've been highlighting, 2900 to 2950. We tagged the top end of it yesterday before bouncing just a little bit. Resistance remains in the area between 3,000 and the July highs at 3030. The RSI is rolling over. So now we're looking for a hold of bullish ranges. Remember, we've been laying out this playbook for weeks now, right? Talking about what we needed to see happen to maintain a bullish stance. Well, what we need to see happen is this support zone hold while the RSI holds in bullish ranges, right? We're testing 50 right now. We've broken this slight uptrend for the RSI indicator. We're now looking for a hold of bullish ranges and a support hold. Chaikin money flow is bullish, so that's one positive sign. So the indicators so far are okay. Market is holding above support, but this is the playbook we've been talking about, right? Futures down a little bit here this morning, likely to test the top end of that range once again today, right? Should we hold the support zone and RSI remain in bullish ranges? That to me would signal that the trend is likely to resume to the upside. A break of 2,900 opens the door to the August lows near 2820 for the S&P 500. Let's talk about our market in a minute. What are we writing about today? Stocks move lower on news of presidential impeachment inquiry. Safe haven assets outperformed as investors started to de-risk a little bit further. Consumer staples, with that in mind, see renewed relative strength. Sentiment moved in the direction of being more fearful, and futures do point to a lower open today, as we said. Let's take a look at the power bars now. Right, you can see the red across the board, the Dow losing 48 basis points, but the power bar ratio actually shifts back to even, 4 bulls and 4 bears. So S&P 500 sees some deterioration in the power bar after it loses 77 basis points yesterday, 113 bulls to 90 bears. NASDAQ was a big underperformer on the day, 18 bulls to 21 bears there, so still skewed to the bearish side. Small caps, also big underperformer on the day, down 1.46%, 601 bulls, 340 bears. So while the power bar ratio is bullish, the relative strength is key here, and small caps just cannot get it going on a relative basis, continue to underperform. Flight to safety lends a bid to bonds up 1.2% on the day, which led to outperformance by the utilities. Utilities leading sector of the market yesterday. And check out the power bar ratio there, 11 bullish or very bullish stocks, 0 bearish or very bearish stocks. Remember, we highlighted the utilities earlier this week. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish, but the major markets are mixed. Let's look at our stock of the day now. Comes to us from a group that you should recognize. We've been talking about insurance quite a bit over the past few months, and for good reason. It's been an outperforming group. We'll take a look at that a little bit later in the show. But American Financial Group closed at 106.78 yesterday, down 30 basis points. Has a very bullish Chaikin Power Gauge rating due to very strong price volume activity, very positive expert activity, as well as financial metrics that are strong and strong earnings performance. So when we roll up the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating, strong trend, strong industry group, type of name we want to consider. Market and model are in agreement. Yes, they are. Stock is outperforming along with that very bullish rating. We're just waiting for a better setup. We are waiting for an oversold condition that coincides with persistently bullish money flow to set the stage for a more compelling entry point in a leading stock, in a leading industry group. Now we've kind of made the turn here, have some solid support at the 105 level. So a pullback that holds around 105 that induces an oversold condition sets the stage for a more compelling entry point on a name like American Financial Group, right? Insurance is a leading industry group. This is a very bullish stock that's outperforming the market with bullish money flow. Just wait for that oversold condition, and the stage is set to enter as a long idea. Add AFG to a bullish watch list here today. Taking a look at our sector tracker now. The movement of the major sectors over the last 5 days still very much has a defensive risk-off type feel to it, right? Utilities at the top of the list, up 1.7% over the past 5 days. Staples positive over the last 5 days. REITs and healthcare round out the top 4, though the latter two have now turned down over the last 5 days. They are outperforming. That is defensive leadership at the top of the market. Materials, tech, financials, and discretionary are middle of the road. Industrials, comms, and energy. Remember what we said about energy, right? We were talking about it. Everybody was starting to get excited, and there was this rotation into the energy sector, a beaten down area for a while. And we said, it's probably too early to call a turn. Well, that proved to be the right call. It was too early to call the turn. Energy continues to underperform the market. Crude oil trading lower after that spike following the attack on the Saudi oil field. We commented earlier, right? Production being restored faster than expected. That's weighing on oil. That's likely to weigh on the energy sector and the stocks within that sector. Now, our industry in focus today, I said we would talk about insurance, so here we go. Over the past 6 months, the insurance services industry group has outperformed the S&P 500 by 8.24%. Its Powerball ratio, which measures future potential, is very strong. 29 bullish or very bullish stocks, only 1 bearish or very bearish stock in the group, and it's currently ranked number 2 of the 21 subsectors that we track. It has moved down 1 slot over the past week, but still near the top of the list, still a leading industry group. There's American Financial Group with a very bullish rating, type of name you want to consider. How about First American Financial, FAF, also with a very bullish rating, and then MetLife, MET, with a very bullish Chaikin Power Gauge rating. So you want to look at these stocks and run through that analysis. Are they oversold with bullish money flow and outperforming the market, to let you know whether or not it is a compelling time to enter names like AFG, FAF, and MET to the long side of the portfolio. But let's just take a look at the industry group here. KIE is the ETF that we use to track the insurance services industry group, and we can see it does have that very bullish Chaikin Power Gauge ETF rating. Trend is strong as the fund trades above a rising long-term trend line. We're up here near 52-week highs, right? Outperforming the market, as we said. Persistently bullish money flow for much of 2019. The only issue I see here is that we're not quite oversold yet, right? Maybe some more consolidation around the $35 mark to get to an oversold reading to really then become aggressive on the long side of the portfolio in this leading industry group. Now, we've been bullish on insurance for quite some time. For those of you who have been reading my notes, listening to my calls, listening to this show, we've been humping insurance for a while. We've liked the group. It's been a solid group, and that continues to be the case here today. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. Intuitive Surgical up 2.5% on the heels of some positive comments around robotics by Medtronic. ConAgra, no real news yesterday, but I will note that they do have earnings tomorrow morning. ConAgra was up 2.25% yesterday. HBI up 2.25%. No real news to account for that trading there. CBOE, same story, up nearly 2%, but didn't see any company-specific news to drive trading there. And NSC made a board appointment to send that stock higher by nearly 2% on the day. On the loser side of the board, FLR is selling one of their government businesses. That stock down 8.45% yesterday. MRO, not only was oil weak, but MRO caught a downgrade, sends that stock lower by 6.75%. Helmerich and Payne, oil weighing on that group, and also seeing some pressure on day rates for the land drillers. That weighed on Helmerich and Payne to the tune of nearly 6%. Halliburton getting caught up in the oil downdraft. Didn't see any company-specific news there. And XEC didn't see anything company-specific to drive that stock lower by over 5% yesterday. Let's drive in now. Sentiment moves towards fear. Here's the 13-period moving average of the CBOE put-call ratio, and we can see we are ticking up back towards that 1 level. We were below 1 last week when we were talking about this. Now, remember what we look for here. We're kind of middle of the road with an edge towards more fear. Now, overly fearful readings, when this indicator gets above 1.1, tend to mark local lows, right? So when we got over 1.1 back in August, we started highlighting the fact that we're likely marking a low here for the S&P 500. That was the case, and the index rallied to test the July highs. And now we've begun to kind of roll over here as the market looks to be carving out a consolidation, some fear in the market on the heels of the impeachment inquiry news yesterday. You know, if we're looking at the CNN Fear Greed Index, it moved from a reading of greed to a more neutral reading. The VIX spiked hard yesterday. So sentiment moving towards fear over the past few days as the market has had a hard time breaking through resistance levels. And it's not just the SPY. If we look at the Qs, if we look at the IWM, I write about this in my note today, all of the major indices in the US are fading from strong resistance levels. So just something to keep in mind here. And with a gravitation towards safe haven assets, that included treasuries. Here's the 10-year yield moving lower. Right? Remember that spike? Everybody was talking about the big spike in yields, and it was a big spike, but it did not change the trend, and that's important. Right? This is why we focus on trends. This is why we study trends. This is why we look for signs that trends could be changing. And until there are those signs, it doesn't make sense to change your view. It's premature. In a clear downtrend, below the 50-day moving average, below the 200-day moving average, below the long-term downtrend line, but still below a shorter-term downtrend line. RSI of yields never became overbought on that spike and is now moving back towards bearish ranges. This is why the trend methodology is so important. Everybody was getting excited. Everybody wanted to try to call a turn in yields. It was premature, folks. We never even broke above resistance at the 2% mark. As long as yields are below 2%, I think the path of least resistance is lower. As we think about what that means for equity markets, likely going to favor the bond proxies, think REITs, think utilities, likely going to be a headwind for groups like financials, in particular the banks. Treasuries have scope to head lower in the U.S. That is our view. That has been our view. We've been pounding the table on that view for some time, and that does continue to be the case until evidence points to that not being the case. Speaking of defensive positioning, let's take a look at the staples here. XLP, consumer staples relative to the S&P 500, holding above support, above a rising 50-day moving average, above a rising 200-day moving average. Look at the RSI here, holding solidly in bullish ranges. This has not become oversold since late 2018, right? So momentum confirming the strong trend higher in consumer staples. Right? When we look for evidence of a trend change, we don't see it here yet in consumer staples. And now add to that the fact that on a relative basis, the group is rebounding from support and beginning to show signs of relative strength again. Probably an area of the market where we want to be focused for long ideas. Names like Kroger, KR. Bullish Chaikin power gauge rating, strong trend, strong industry group. Market and model are in agreement as that bullish rating is met with a stock that is beginning to outperform. So a bit of a personality change here. Here's the setup though. Stock is oversold with bullish money flow above a rising long-term trend line as it is making the turn here. Some solid support in the $24 to $25 area. Kroger is the stock that I'm featuring in my note today, and I think it makes sense to take a look at it as a bullish position. That's going to wrap it up for today. Just a reminder, my market survival guide published every Tuesday. Head over to the site and check it out. I will be back here tomorrow. Have a great day, everyone.